Chapter 1, Part 1 contains bookkeeping, accounting, statement of financial position, capital, assets, liabilities, accounting equation, financial statements. Bookkeeping. Bookkeeping is a process of detailed recording of all the financial transactions in the business. Accounting uses the bookkeeping records to prepare financial statements and regular intervals. Statement of financial position. The owner of the business also needs to know the financial position and regular intervals. So, a statement of financial position is prepared. This shows what the business owns and what is owing to it, its assets, and what the business owes its liabilities. The term financial statement is often used as a collective name for an income statement and a statement of financial position. Capital. When a person decides to start a business, will have to provide the necessary funds resources. It is often in the form of monetary funds that may consist of buildings, motors, goods, and so on. Any resources provided by the owner of the business are known as capital. These represent the amount owed by the business to the owner of the business. Assets. Once the business is formed in capital entity, the business will own the money or other items provided by the owner. Things owned by the business or owed to the business are regarded as the resources of the business or the assets of the business. Example: machinery used in production, building used in for office, computer used for accounting work. Liabilities. In addition to the owner, other people may also provide assets to the business. The amount owed by the business to these people is known as liabilities. Example: loan taken from bank. The accounting equation. Assets is equal to capital plus liabilities. The accounting equation. Assets is equal to capital plus liabilities. Like any other mathematical equation, the two sides of equation will always be equal. The formula for this equation is assets is equal to capital plus liabilities. Capital is sometimes referred to as owner's equity. So the previous equation can also be written as assets is equal to owner's equity plus liabilities. Like any mathematical equation, the accounting equation can be used to find any one of the three elements.
फीचर निकाल दिया जो आपके लिए काफी हेल्पफुल हो सकता है। तो अगर आपको लगता था कि आप एक छोटे यूट्यूबर हो, आपके कम नंबर्स है, कम सब्सक्राइबर्स हैं और आपको व्यूज नहीं मिल रहे, शायद अब आपको बहुत अच्छी विजिबिलिटी मिल सकती है, बिकॉज यूट्यूब ने एक नया फीचर निकाल दिया जिसका नाम है हाइप, HYPE। और अगर आपको नहीं पता, मैं आपके लिए एक और इन्फॉर्मेशन देता हूँ। यूट्यूब पे जो अभी तक वो ट्रेंडिंग पेज आता था ना, जो एक बहुत बड़ी अचीवमेंट होती थी लोगों के लिए, जैसे आईफा अवार्ड मिलता है, वैसे रहता था कि यार ट्रेंडिंग पेज पे नंबर 1 पे, नंबर 5, नंबर 10 पे। और वहाँ एक अच्छी चीज ये थी कि चलो आपको एक मोटिवेशन मिलता था, बट सबसे बड़ा ड्रॉबैक ये था वो सिर्फ 1% या इवन 0.5% यूट्यूबर्स के लिए यूजफुल था, जिनके मिलियंस में सब्सक्राइबर्स थे। जो लोग नया शुरू कर रहे हैं, जिनको 1-2 साल हुए हैं, जिनके ज्यादा सब्सक्राइबर्स नहीं है, आपके यहाँ मेरी तरह 1000, 2000, 5000, 10,000, 1 लाख, वो हार्डली कभी ट्रेंडिंग में जाते थे। तो अब क्या होगा, ट्रेंडिंग पेज पहली चीज हट चुका है। अगर आप यूट्यूब पे एक्सप्लोर पे जाओगे तो आपको ट्रेंडिंग नहीं दिखेगा। तो अब नया क्या आया है, नया फीचर है हाइप। अगर आप एक्सप्लोर पेज में नीचे को जाओगे, आपको हाइप का एक सेक्शन दिखेगा। अब वो कैसे यूज करना है, सिक्योर, उसकी बात हम बाद में करेंगे। सीधे मुद्दे पे आते हैं, एज ए यूट्यूबर आपको क्या फायदा होने वाला है। तो देखो, कंक्लूजन ये है कि आप जब एक वीडियो अपलोड करते हो, ठीक है, पहले 7 दिन के अंदर अंदर जो भी लोग आपकी वीडियोस देख रहे हैं, वो आपकी वीडियो पे हाइप दे सकते हैं। बेसिकली आपको पॉइंट्स मिलेंगे, और अगर आपको ज्यादा पॉइंट्स मिलते हैं तो आप एक्सप्लोर पेज, जो हाइप वाला पेज है, वहां पे आपके आने के चांसेस बढ़ जाते हैं। और बढ़िया चीज ये है कि अगर मैं आपको एक क्या दिखा देता हूँ, अगर आप यूट्यूब पे हाइप पेज पे जाओगे, आपको ये जो भी चैनल्स दिख रहे हैं ना, ये सब 5 लाख के नीचे और 500 के बीच में है। तो जो नए यूट्यूबर्स हैं, जो नए क्रिएटर्स हैं, वो यहाँ पे दिख पाएंगे। ये सबसे बढ़िया चीज है। इसको डिटेल में समझ लेते हैं। सबसे इंपॉर्टेंट चीज, एलिजिबिलिटी क्राइटेरिया क्या है, कौन यूट्यूबर्स इस फीचर को यूज कर पाएंगे। सबसे पहले मैं आपको बता चुका हूँ, आपके जो सब्सक्राइबर्स हैं वो 500 से ज्यादा और 5 लाख से कम होने चाहिए। बहुत अच्छी रेंज है, तभी आप इसके लिए एलिजिबल होते हो। दूसरी चीज, जो आप वीडियो अपलोड करते हो, जैसे मैंने आज वीडियो अपलोड करी, आज है 23 जुलाई, तो अगले 7 दिन तक ही जितने मुझे हाइप के पॉइंट्स मिलेंगे वही कंसिडर होंगे, ठीक है। तो आपकी वीडियो सिर्फ 7 दिन पुरानी ही होनी चाहिए, उससे ज्यादा पुरानी पे हाई पॉइंट्स कंसिडर नहीं होंगे। सबसे इंपॉर्टेंट चीज आपकी जो एज है एज अ कंटेंट क्रिएटर या यूट्यूबर वो 18 प्लस होनी चाहिए, तभी आपको ये हाई वाला फीचर मिलेगा। और ये फीचर ऑटोमेटिकली आएगा, आपको कुछ सेटिंग आगे इनेबल नहीं करना। हर एक चैनल एज लॉन्ग एज आप एक क्राइटेरिया को मीट करते हो, आपके वहाँ बाय डिफॉल्ट आपके चैनल पे आ जाए। और एक सबसे बढ़िया पॉइंट जो यूट्यूब ने यहाँ पे लास्ट में मेंशन करा कि कुछ कंटेंट की कैटेगरीज हैं जिसको यूट्यूब इस हाइप वाले जो टैब है जो एक्सप्लोर पेज है उससे एक्सक्लूड करेगा। एंड ऑब्वियसली आप समझ सकते हो किस तरीके की वीडियोस, बिकॉज जिन तरीके की वीडियोस ने ट्रेंडिंग पेज पे गंद मचाया था जिस वजह से लोग ट्रेंडिंग पेज पब्लिक स्पेस में खोल भी नहीं सकते थे, वैसा कंटेंट शायद अब यूट्यूब उसको एक्सेप्ट इस कैटेगरी में नहीं करेगा। अब बात करते हैं एज अ व्यूअर या जब आप वीडियोस देख रहे हो तो आप कैसे हाइप कर सकते हो। सबसे इंपॉर्टेंट चीज, आप एक अकाउंट से जब वीडियो देख रहे हो आप एक हफ्ते में 7 दिन में सिर्फ 3 बार किसी भी वीडियो को हाइप कर सकते हो। चाहे तो आप सिंगल वीडियो को 3 बार कर सकते हो या अलग अलग वीडियोस को सिर्फ 7 दिन में आपको 3 ही फ्री जो हाइप है वो मिलेंगे। अब यहाँ पे यूट्यूब ने मेंशन करा है कि मंडे मिडनाइट मतलब संडे जब खत्म हो रहा है मंडे शुरू हो रहा है उस टाइम पे वो जो 3 आपके हाइप वाले अकाउंट्स हैं वो रिफ्रेश हो, तो आप फिर से दोबारा आपको 3 हर हफ्ते जो हाइप है वो मिलते रहेंगे। अब आपको ये हाइप करना कैसे है, तो देखो सिंपल सी चीज है, आप जब यूट्यूब पे जाओगे कोई भी चैनल जो आप देख रहे हो, अगेन 500 से 5 लाख के बीच में जितने सब्सक्राइबर्स हैं वहां आप देखना जैसे ही दो तरीके हैं। पहली चीज आप जैसे वीडियो लाइक करोगे ऑटोमेटिकली यहाँ बना हुआ आ जाएगा हाइप वाला सेक्शन। दूसरा ऑप्शन है जो कमेंट, आपको ये सेक्शन दिखता है, आप सिर्फ स्वाइप करो राइट से लेफ्ट को, आपको यहाँ पे हाइप का फंक्शन दिख जाएगा। अब आपको अगली चीज क्या करनी है, सिंपली यहाँ पे हाइप पे टैप करो, आपको एक नया पेज दिख जाएगा। वहां पे आपको ना ये बताएगा कि पॉइंट्स कितने मिलेंगे अगर आप हाइप करते हो। और इंटरेस्टिंग चीज है, यूट्यूब ने बहुत सही चीज की, मुझे ऐसा लग रहा था कि यार ऐसे तो जो 5 लाख वाले सब्सक्राइबर्स हैं उनको ज्यादा लोग देखते हैं तो बोलेंगे हाइप करो तो वो हमेशा ट्रेंडिंग पे रहेंगे। ऐसा नहीं है, बेसिकली जितने सब्सक्राइबर काउंट है ना उस हिसाब से पॉइंट्स रहेंगे। जिनके कम सब्सक्राइबर्स हैं उनको पर हाइप ज्यादा पॉइंट मिलेंगे, जिनके ज्यादा सब्सक्राइबर्स हैं उनको कम पॉइंट्स मिलेंगे। तो ये चीज यूट्यूब ने अच्छे से ध्यान रखी है। अब आप जब हाइप पे क्लिक करोगे आपको ये दिखा देगा कि आपके कितने पॉइंट्स ऐड होंगे उस वीडियो में जिनकी आप वीडियो देख रहे हो, और वहां दिखाएगा जो 100th वीडियो है ना मैक्सिमम लिस्ट 100 की होगी उसमें हाई पॉइंट्स कितने हैं। तो अगर वो हाई पॉइंट्स उसको क्रॉस कर लेते हैं जिनकी आप वीडियो देख रहे हो तो ही वो उस लिस्ट में आ पाएंगे। ये सब करने के बाद अगर आप चाहो तो लीडर बोर्ड पे क्लिक कर सकते हो और आपको जो 100 हाई वीडियो है वो यहाँ पे दिख जाएगी। तो बस यही है मेजरली। अगर मैं कंक्लूड करूँ तो देखो एज ए यूट्यूबर आपको फायदा तो रहेगा, बिकॉज अगर आपके कम सब्सक्राइबर्स हैं अभी तक आप ज्यादा एक्सप्लोर नहीं हो पा रहे थे, तो आप अगर ट्रेंडिंग पेज के हैं तो लोग हाई पेज पे जाके जब फ्री टाइम में वीडियोस देख रहे होंगे। अब ऑब्वियसली चांसेस है कि आपकी वीडियो व्यूज रिकमेंडेशन में आ सकती है। शुरू में आप अपने वीडियोस में बोल सकते हो कि भाई हाइप करके देखो इस वीडियो में, शायद लोग अगर आपको ज्यादा हाइप करते हैं तो आपको ज्यादा चांसेस है आप उस लीडर बोर्ड में आ सकते हो। उसके अलावा एज सच कोई बेनिफिट नहीं है। और जहां लोग बोल रहे हैं कि अब लाइक करना सब्सक्राइब करना सब खत्म हो जाएगा, ऐसा कुछ भी नहीं है। लाइक सब्सक्राइब कमेंट शेयर ये सब बहुत मेजर एलिमेंट्स है, बहुत मेजर एल्गोरिथम में कंक्लूड करते हैं उसमें बहुत मेजर।
Goods purchase for cash or check. Whenever goods are purchased, the purchase account will be debited. The purchase are coming into the business and the purchase account is receiving that time. The double entry will be created in either the cash account or the bank account depending on whether the amount is paid in cash or check. Goods purchase on credit. It is common for business to buy on credit and pay for the goods at a later date rather than at the time of purchase. The purchase account will be debited in the usual. Trade creditors account payable. The credit entry will be made in the account of the supplier of the goods to show the value coming from the person. The supplier of the goods is known as trade creditor or account payable. An agreement is made to the supplier. The bank account will be created to show value going out of that account, and the account of the supplier will be debited to show value going into that account. Goods sold for cash or check. Whenever goods are sold, the sales account will be credited as the goods are going out of the business, and the sales account is giving out the value. The debit entry will be of debit in either the cash account or the bank account, depending on whether the amount is received in cash or by check. Goods sold on credit. Just as the business may purchase goods and pay for them at a later date, it may also sell goods on credit. The sales account will be entered in the usual way. Debit entry will be made in the account of the customer, accounts receivable to whom the goods are sold to show the value going out to that customer. Trade debtor or accounts receivable. The customer who bought the goods and credit is known as trade debtor. When the payment is received from the debtor, the bank or cash account will be debited to show value coming into that account, and the account of the debtor will be debited to show value going out of that account. Purchase return or return of goods or goods. Sometimes goods which have been purchased have to be returned to the supplier. This may be faulty, damaged, or not what was ordered. These goods are known as purchase returns or return of goods. A special account known as purchase expense account or return outward account is opened and entries are collected and is found to show the value of the entry. The debit entry will made in the account of the seller to whom the goods are being returned to show the value of the customer. Sales return or return note or goods. Similarly, a customer may return goods to the business. These goods are known as sales return or return notes. An account known as sales return account or return is opened and many returns are debited to this account to show the value company. The credit entry will be made in the account of the customer who returned the good to show the value company to that person. Double entry records for carriage invoice and carriage assets. The term carriage refers to the cost of carrying transportation goods. Carriage inward is part of the cost of which occurs when the business has to pay for goods it has purchased to deliver to its premises.
Yeah.
Double entry records for carriage inwards and carriage outwards. Carriage
Hello?
outward is the selling expenses which occurs when a business pays for goods to be delivered to the customer's premises. It is important that these two expenses are treated separately in the accounts. Carriage inward, carriage outward. Goods cost is the cost of transporting goods. Carriage inward is the cost of bringing the goods to the business, and carriage outward is the cost of delivering the goods to the customer.
Okay.
Three-column running balance
Okay.
accounts. The ledger account presented so far have been traditional form. This is also known as the tree account. There is another method of presenting ledger account is commonly used in presenting accounts, which is known as three-column running balance format. The form of presentation is only one column each for the date, detail, and value, and has three money columns to the side, one for debit, one for credit, and one for balance each transaction. The advantage of this method is that it shows the balance of that account after every transaction. The account are prepared manually, it involves extra calculation errors. Contents, a trial balance format of a trial balance for particular balance. Balance trial balance, error of a trial balance. It is important to remember that the trial balance is not a part of the business system. It is simply a list of balances. The ledger accounts are balanced. Then a trial balance can also be drawn on the trial balance. The trial balance should be added to the trial balance along with the date of the contents of the format of trial balance. The purpose of a trial balance. The trial balance can accumulate in multiple periods. However, the balance in the trial balance is not more than the accuracy in the ledger account. The trial balance is useful in preparing financial statements. Trial balance analysis. The trial balance analysis. The trial balance needs to balance. The trial balance considers the obvious denominator and enough addition between the trial balance and error of addition entering a different figure on the page for the table of making a signature for a transaction balance trial balance does not include the capability. The trial balance needs to have balance and the amount of the error of profit. This occurs when a transaction cash receipt error of complete. This occurs when the corrector cash flow related to cash flow error of omission. This occurs when a transaction is error of omission. This occurs when goods of dollar error of principal. This occurs when transaction what expenses were paid for compensating error. This occurs when these occur when both products errors cancel out each other. Purchase discount under added by other recommended principal accounts. Chapter 5 part contains litigation system advantage litigation core system. Litigation system 6 part 1. This lesson will discuss about invoice, credit discount, cash discount, checks on invoice. In essence, give some the following: the name and address of the supplier, the name and address of the customer, the date, full details, quantities, and prices. Trade discount. Sometimes the supplier allows the customer to receive the rate of the discount offer increases according to the quantity price. So encourage the customers to buy. It also gives the businesses in the same rates of businesses will not be generally paying the full rate available to the profit. Cash discount versus trade discount. In order to distinguish between cash discount and trade discount, trade discount is known in the definition of invoice. Cash discount is not known as a deduction for invoice as it is only allowed with an explained in the supplier. Debit note. A debit note is a document issued by a purchaser of goods for a request to reduction in cash. Credit note. A credit note is a document issued by a seller of goods for statement of account. At the end of each month, the supplier will immediately issue the statement of this. This is a summary of the transaction for the month. The style of the statement of account not contained in one. The name and address of the supplier, the name and address of the customer, the date, the balance waiting, the standard of the invoice, the balance waiting, checks or checks many accounts are paid inside check. Other methods of payment through the banks or the transfers or standard. Check is a written order to a bank place when it's amount of the person. The book of credit name with all checks is issued to the bank customer amount of the person or business to hold the funds. The receipt. The receipt is a written acknowledgement of the receipt. It acts as a proof of existence which informs the bank of the receipt. So chapter 7 part 1 contains mix of private label, mix of private label list, sales revenue, sales invoice, sales revenue, mix of private label business. Usual is mix of private label record sales revenue, sales revenue, sales invoice. Mix of private label also known mix of business. So there are some more dimensions before they are entered. Mix of private label is the mix of private label are cash revenue, sales revenue, purchase revenue, sales revenue, purchase revenue, sales revenue. The sales revenue is used in the mix of business. The value of the sales invoice and sales revenue for the sales revenue is equal to the sales revenue. This generally is written on the copies of the business records. These are summarized as follows. Goods are sold at credit. Enter the date customer debit the customer's account in the sales ledger with the invoice total. At the end of the month, credit the sales account with the amount paid to the sales. This will now form the double entry for all the sales returns. The sales returns generate a list of new items in the value of each and the goods under the sale returns the sales returns or returns invoice. This generally is written up with copies of the credit notes and the customer entries are summarized as follows. When goods are returned by a customer, enter the date customer credit sales. Credit the customer's account in the sales. At the end of the month, debit the sales return before the account. This will now form the double entry for all purchase journal. The purchase journal is a list of names of businesses for which creditors will the value of the purchase and creditors on the purchase. The purchase journal is also called the purchase book or purchase history. This journal is written on the creditors. The entries are summarized as follows. Goods are purchased on credit. Enter the date supplier purchase. Credit the supplier's account in the purchase history. At the end of the month, debit the purchase account in the non-credit purchase history. This now form the double entry for all including the purchase return statement. The purchases return statement is a list of goods and services the order of goods and the purchases return statement is also exposed. This journal is mainly used in the purchase return statement. The entries are summarized as follows. Goods are returned to a customer, paid supplier, or the paid supplier will be returned. Totally the purchases. Debit the supplier's account to purchase the item. At the end of the month, date the purchase returns of the amount of the non-debit purchases. This will now form the double entry for all Chapter 8, Part 1. This lesson will discuss about an income statement, a statement of financial position, financial statements, transaction, cost of sales, which is a statement of profit, profit and loss statement, statement of losses, comprehensive statement, statement of services. An income statement. Income statement is consists of three sections. A trading section in which the gross profit of the business is calculated. Profit and loss section in which the profit of the business is calculated. The trading section and the profit and loss section of the statement are included in the system. The statement of financial position. The statement of financial position shows the assets and liabilities of the business and its security. The statement of financial position is not common in the system. Financial statements. Income statement and a statement of financial position are called financial statements. Financial statements are usually prepared with significant data and expenses. Consequences of the financial statements. Trading section. Trading section is concerned with the consequences of the system of the cost for calculating cost of business cost of sales. Cost of sales represented by cost of goods and key not necessarily cost of sales. Cost is stock and formula for calculating cost of sales is cost of sales is equal to formula for calculating purchase price and purchases. Goods for goods. Trading performance. This is the trading performance which represented in the sales and trade. The same range like this is the PAT and this is the profit. Profit and loss section and cost of profit and loss section includes the concept of profit and losses, income and expenses. Its purpose is to calculate profit and non-operating expenses. This is another formula for calculating expenses. Profit and loss section. So this is the formula profit and loss section. Horizontal formula is vertical section and cost of section. Or the vertical formula. Using the horizontal formula, using the horizontal formula show the difference in expenses. The difference sets right side is the largest or loss side is the largest. Compliance includes this is the format of compliance includes gross profit. Income statement and expenses. This is Chapter 10, Part 1, Accounting Principles, Conventions and Assumptions. Contains accounting principles, business entity concept, consistency, duality, going concept, historical concept, matching principle, materiality concept, mean measurement, prudence, realization, international accounting standards, comparability, relevance, reliability, understanding, capital expenditure, revenue expenditure, capital receipt, revenue receipt, duality. Accounting principles. Accounting principles are sometimes referred to as concepts and conventions. Concept is a rule which sets down how the financial activities of a business are run. Convention is a discipline business entity. The business entity principle is also used in the accounting principle. The personal assets of the owner of the personal spending asset do not appear in the accounting record. The accounting records relate only to the business and record the assets of the business. The liabilities of the business and the business assets. Everything is recorded from the viewpoint of the business. Transaction concerning both the business and its owner recorded in the account. When the owner entity is capital into the business, to the capital account. To show the funds coming from the capital account shows credit balance where the business to the owner. When the owner is drawing the business everything to show the value to the reduces the amount owed to the consistency. There are some areas of accounting with choice of method is available. For example, there are several different ways to calculate the depreciation of the choice of method is available. The one with the most realistic calculation. Once a method has been selected, the method will be this is known as the consistency. This is not the comparison of the financial results from the another is the cost of the deposit from this study. There may be a good reason why it is necessary to change the knowledge. The change in duality. The principle of duality is also referred to as the dual aspect. Every transaction has two aspects, a giving and a receiving. The term double entry is used to describe how these two aspects are doing things. Accounting record of business are always this means that it is assumed that the business will continue. The least significant of the whole concept. This continuity is non-current assets listed here. This is our doing costless business. Inventory will appear at the lowest lower of cost or material. If it is expected that the business will cease to operate in the as following the state of assets will be sure and their expected sales value because no historic cost. The historic cost is requires that all assets and is linked to the cost is a known factor. Like this person because of the effect of inflation. Sometimes it is necessary to adopt non-current assets. So the cost will be very good. The matching principle is also referred to as the accrual. This is an extension of the realization principle to the revenue of accounting period is not taken by also the same. The figure shown in the income statement is related to the figure in the account. Whether or not this means that it is more relevant to sales expenses and not. It is an equivalent principle applies to items of items which are not meant to be called. Other principles can be included as time, cost, not in cost, or the eligibility. For example, a pocket calendar purchase from part of its value is lost each day. A pocket calculator in the context of CC would have to be more than the cost of that. Instead of the calculator with the context of expense in the year of that is original for laptop printer is divided into the cost. Written for the small printer. The large business is a non-current assets of more than will be regarded as which are small business may have a slower value. This principle is also applied to small business for office expenses like utility is also applied the total cost of millimeter only it does not rely on cost. There are many aspects of it which not appear in the rule of business. Good manager, because of stock is often part is not appear in the account. In a similar way, one of the files as a reference students. The student principle is also known as the principle of conservation. This principle ensures that the account is not present to a student. However, excessive of things is not allowed or the deliberate is in short, the phrase more specific to discuss the principle of profit should only be recognized in the principle capital after the last. However, this is very important. It is analysis for a plan of the when the principle of business applies. For example, under the relationship with profit is earned and this actually changes. If the customer pays the pay after the principle of realization. Realization principle of the important is not the common of profit. This means that the revenue is the capital. So how we after this when order is placed to a customer, no exchange and profit. Profit is divided by actually change. This is the same meaning that which are no longer when customer does not pay for international accounting. International accounting ensure that financial statements are prepared in this knowledge of the individual accounting. The objective of the standards are to achieve the quality of information contained in the this quality of information can be very important. Comparability, relevance, clarity, and understanding. Comparability. The information contained in financial statements can be used or a higher plan. It is also useful to the ability to be able to compare the information. In order to make comparisons, it is necessary to any changes in this policy important to be able to in the financial sector the information relating to other balance. Financial statement for information related to this can be used as a basis for financial important to information not only it is also important to the this means that it can be used to compare market and also to help farmers reliability. Keep ordering currency statements on the uses of basically the goal of the better suitable cost compared to understandable. Choosing the financial statements can be understood by the uses of the clients. This depends not on the clarity of the information. It is normally assumed for users of financial statements and accounting. How information calculation. Not only cost of character. These costs will appear in our current assessment. They should not be charged. The value of non-current assets often decreases because of this cost. Health benefits. Revenue expenses. These and the cost of also include the cost. Suppose this cost will appear in these two types of expenses. These still value also people it becomes the critical to the profit of the mistake and the capital also calculation. Calculation the person from having simple to that capital for depreciation. Chapter 12, part 1. Depreciation. So in this lesson, we are going to learn about depreciation, the whole concepts of depreciation, methods of calculation, straight line method, advantages and disadvantages, reducing balance method, revaluation method of depreciation, recording depreciation, accounting depreciation, account depreciation, position statement, depreciation manufacturing accounts, the net book value, depreciation appears twice, disposal of non-current assets. Depreciation. Depreciation is an estimate of the loss on value of the non-current asset over its expected working life. Most of the non-current assets of a business lose value over a period of time that are used by the business. If the accounting records continue to show these assets at their cost value, then the accounts will provide estimated cost. It is therefore necessary to record an estimate of the loss in value. The records can only show an estimate of the loss in value of the non-current asset because of depreciation. The exact amount will only be known when the asset is disposed or sold. Buildings depreciate over time, but land does not usually lose value unless it is something like a well or mine when value is decreasing in the land. The whole concept of depreciation. The purchase of non-current asset is capital expenditure, and the cost of non-current asset is not salary and expense in the year of use, which is benefits the business for several years. Matching the capital expenditure against the sales, it has helped the business to earn is done by annual charge for depreciation. This means that the cost of non-current asset is spread over the years, which benefit from the use of that asset. The depreciation for the year is included in income expenses. So the profit for the year is not overstated. This is an application of the principle of the profit is overstated. The owner of the business will be tempted to withdraw more cash than the business can actually offer. The principle of prudence is also applied in the statement of financial position when the non-current assets are recorded figure less than the cost price. This is known as the book value or the returned on value. This overrides the historic cost principle as it ensures that the non-current assets are shown before the statements. Causes of depreciation. The four main causes of depreciation are physical deterioration, non-continuous passage of time, this is the result of wear and tear due to the normal usage of the non-current asset. It can also be because the asset falls into poor physical state, leading to rust or damage. Economic reasons. The non-current asset may become inadequate because it can no longer meet the needs of the business. It can also be because the non-current asset has become obsolete as newer and more efficient assets are now on. Passage of time. This arises when where a non-current asset, for example, a lease has fixed life of a set number of years. Depletion. This arises in connection with non-current assets such as wealth and money. The worth of the asset reduces its value is taken from the asset. Methods of calculating depreciation. There are several methods used to calculate the estimated loss and value of non-current assets. Different types of non-current assets are often depreciated. The method selected should be the one which spreads the cost of the asset as quickly as possible for the period. Once a method has been selected for a particular non-current asset, it should be applied each year. This is an application of the principle of consistency. In practice, many factors are considered before a depreciation method is selected. These are how long is the asset expected to last, how much will the asset be sold for maintenance before use, how can the benefits from the use of the asset be measured. These are the three main reasons for depreciation: straight line method, reducing balance method, straight line method of depreciation. This is also known as fixed installment method or cost method. The formula used for calculating the annual depreciation is cost of asset over number of expected years of use. This expresses the annual depreciation as an amount of the answer to this formula expressed as a percentage of total cost. This method applies the same amount of depreciation on the same percentage of total cost by each year. The value of the asset can fall to nil if there is no residual value. This method is used where each year is expected to benefit equally from the use of the asset. Advantages and disadvantages. Advantages of the straight line method of depreciation. It is relatively easy to calculate. It is useful when a non-current asset provides equal benefit for each year of its useful life. Disadvantage of straight line method of depreciation. It is necessary to estimate the useful life and the residual value of non-current asset. It ignores the actual rate at which the non-current asset. Reducing balance. Reducing balance method of depreciation. The remain because the amount of depreciation reduces each year. The same percentage rate is applied, but it is calculated on a different value each year. At the end of the first year, the depreciation for the year is calculated on the cost of the asset. The depreciation of the following year is calculated on the cost of the asset plus the depreciation previously written. The figure of cost plus depreciation is known as the net book value or return on value of the asset. The value of the asset can never fall to nil as the depreciation on all is calculated by the percentage of. This method is used when the greater benefit from the use of assets is to gain the value of the asset. Assets depreciated by this method often have low maintenance cost. This method is often used for those assets which quickly become out of date because of advanced technological progress. Any residual value is taken into consideration. Advantages and disadvantages. Advantages of the reducing balance sheet of depreciation. Matches cost with reduced for these non-current assets with greater business. Disadvantages of the reducing balance sheet of depreciation. The depreciation has to be recalculated each year. The depreciation charge against profit is greater in the years of non-current assets. Revaluation method of depreciation. This method is used where it is not practical or it is difficult to keep detailed records of the non-current assets. Detailed records are not available. Small items of equipment used in offices and laboratories, packing cases, use cases, are usually depreciated in revaluation. As no detailed records are kept for these assets. The assets are valued at the end of the lease. This value is compared with the value at the end of the previous financial year or with the cost of the lease. If it is the first year of ownership, the amount by which the value of the asset has fallen in the depreciation cost. Advantages and disadvantages. Advantages of the revaluation method of depreciation. It is not necessary to estimate the useful life and useful value of the current asset. No complex calculations are required. Disadvantages of revaluation method of depreciation. The non-current asset has to be revaluated at each year. The valuation is based on personal opinion. Recording depreciation in the ledger. Recording depreciation using the statement method and reducing value. The procedure for entering depreciation calculation statement and reducing value. Feature of non-current asset as two ledger accounts: an account for recording the cost of the depreciation, account for recording the depreciation, provision for depreciation. The asset account always has a debit balance and the provision for depreciation always has a credit balance. These two balances must always be considered. The difference between the balances of these accounts is the debit balance. Recording depreciation in the financial statements. Recording depreciation in the financial statements. The depreciation for the year always adjusted to and is debited to the income statement. This reduces the business profit for the year. As depreciation is non-monetary expense, it is usually shown under the monetary expenses in the income statement. Depreciation in manufacturing business. So the business is a manufacturing business. Depreciation of this is manufacturing process rather than manufacturing. This increases the cost of manufacturing, which in turn reduces the profit for reducing the recording depreciation in the statement of financial position. It is usual to show the total cost of the stock non-current assets by the total depreciation account to the date of statement of financial position. Refer to as depreciation. The difference between these figures is the net value. Depreciation appears twice. The financial statements are prepared from the trial balance and its accompanying notes. In the trial balance, the balances and assets for are shown in the trade column. One of the notes will indicate the depreciation to the charge financial year. The depreciation for the year will appear twice in the financial statement, which is an expense in the income statement and it is included in the statement of financial position as part of the provision for depreciation. The depreciation for the year is added to the balance sheet. Disposal of non-current asset. Because the purchase of non-current asset is capital expenditure, it is recorded in account for the current asset rather than in purchase account. When a non-current asset is sold, it is capital asset and is recorded in special account known as disposal of non-current asset account rather than in the sales account. When a non-current asset is sold or destroyed, it must be removed from the ledger. The cost of the asset and the depreciation of the asset are removed from the asset account and the profit for depreciation account transferred to the expense. The process of sale are also entered into this account. It is quite likely that this account will not balance. This is because the depreciation was only an estimate of the loss in value. Only when the asset is sold can the actual loss in value be calculated. The difference on the disposal account represents whether the loss on disposal and the actual depreciation proved to be more than the estimate or a profit in disposal and the actual depreciation proved to be less than the estimate. Chapter 13, Part 1, Irrecoverable Debts and Provision. In this chapter, we discuss irrecoverable debts, writing of irrecoverable debts. Provision for recruiters, estimation, creating, adjusting a provision for recruiters. Irregular. If goods are sold on credit, the customer is allowed to pay for the goods at the level. It is always said if the customer is not for those goods. And equal debt is an amount owed to not equal to the customer. This may be because the customer has disappeared and has gone out of business, or because if all reasonable steps to obtain payment, the debt is written. The account of customer is closed, the transfer is made to the at the end of the year, the total of the irregular debts account is transferred to the account, where it is regarded as an writing off. Writing off irregularities is an example of application of the principle of necessity. The debt cannot be regarded as an asset, so that the assets are not yours. The amount of the irregular debt is regarded as a loss for the so on the income statement the profit for the recovery debts. It is written off may be recovered if the customer pays some or all of the after that. As the account of the customer has been closed, the amount received is verified and it is recovered account. An alternative method is to reinstate the debt by creating the debts before the account and debiting the customer the amount used. The amount received would then be ensured in by debiting the cash and crediting the customer. The advantage of this method is that all the transactions related to the customer appear in the year-end adjustment. At the end of the year, the total of the debts recovered account can either be transferred to the state as income for the year or transferred to the credit of the recovered account. It reduces the debts year. Reducing the possibility of irreparable debts. The only certain way of avoiding irreparable debts is not to sell differently. In practice, this is not always an option. All possible steps must be taken to all. Before allowing credit to the customer, credit preferences is confirm that customer is banked and credit use. A credit limit is usually used for each customer. This is an upper limit of this credit limit can be reviewed clearly. The establishment of credit limit and the limit invoices and month-end statements account should be issued promptly. The IGCSE account. Any overdue account should be investigated and customers contacted to no further goods should be supplied until the amount due is paid. The more extreme measure must be legal action. Sometimes the amount of the is too small to justify costly legal. Provision for documents. The provision for documents is an estimate of the amount of at the end of their financial year, businesses grants which will be lost because of inflation. This ensures that the profit for the year is not overstated and realistic. This is an application of the principle of maintaining a provision for documents. The business also observes the principle of the amount of sales for the business is unlikely to be negative rather than expense of the rather than expense of the year estimation. In order to make a provision for the it is necessary to estimate the amount of provision is established by looking at each individual credit customer. Credit customers account estimating between not between not estimating on the basis of past experience the percentage of total considering the length of time that's outstanding evidence of acquisition. The provision for of a higher percentage may be made on more than the longer it is. Creating a provision for doubtful debts. Once it is decided to create a provision for doubtful debts, the percentage of this can be recorded in the books. These entries are made at the end of the financial year. The entries are summarized as follows. Debit the income statement, the income provision for debt. The statement of financial position, divide the balances of the provision. Adjusting a provision for debt. Future years it will be decided to include the provision. If the amount owing has increased, the provision will be increased. So the provision, original provision for doubtful debt was based on the amount of the other necessity. This adjustment for the provision of doubtful debt is this as debit the provision for doubtful debt amount with the provision. Transfer the difference in the product. In the statement of financial position, it is the balance of revenue for the index account, the new provision. Chapter 15, Part 1. All the entities. This chapter we discuss about the transactions, correction of errors, suspense accounting based error of effect of errors on financial statements. Agent of not follow not enter and the capital purchase and sale of they should enter not the transactions these often consist of transactions which are not transfers the public correction status the recording errors which are not shown in the types of errors. 6 types of errors error of principal component. Error is a good errors are not regarding the suspense account. Suspense account ensures the balance of balance and operations. It also allows is resolution and ensure the balance. Showing the suspense errors are not balance correction appear in the corrections effect on statement of the errors are discovered and corrected of other items. Chapter 16, Part 1, Control Accounts. Control Accounts. In this chapter, we will discuss all about control accounts. Contents of control account, sources of control accounts, items included, excluded, control accounts. Control accounts are also known as legal accounts. The balance displays the balance of the economic this compared to considerable amount of time, the checking process can be speeded up with control account process which control the amount of the these accounts act as a check on the these levels. When the trial balance of the accounts check driving elements, whether such execution criteria. Sales ledger control. Sales ledger control account is an account summary and all the accounts. Purchase ledger control account. Purchase ledger control account is an account summary and all the accounts. Advantage of accounting. There is two set of accounting concepts. The advantage of preparing contrast from a system of they are good, practical accuracy, legit. The balances of the accounts are identical to the receivers and the total of the trade. So these are draft financial statements can be prepared with the analysis for cost. They have to reduce fraud and the control accounts are prepared not may audit this aspect. They provide a summary of the transactions that they receive. Excluded account. Essentially, the account is a summary of the accounts of the customers. Not included, such as cash sales and credit. Sales ledger control account. Sales ledger control account. This is also referred to as the this account is the amount of the customer. But instead of conducting transactions, contains transactions to all the records. The typical sales ledger control account. Sales ledger control account. So on the debit side, you can see the balance, sales, bank outside discharge. So on the debit side, sales is cash, discount element. This account acts as a account. Here, the sales source of basic credit customer discount differential credit customers. The recruitments of this the total of the balance of taking the purchase ledger but instead of comparing transactions typical purchase is so you can see purchase items on the debit side, cash, bank, on the credit side is valid for the purchase, discharge, or losses. So the accounts is this is of purchases after then to do this charge the total of the balance on if they differ it together they will what is not used. The account in the sales and purchase ledger amount are not used to do it, but they not what is included. Sales ledger account is the account of the customers purchase and sale account such as cash and account is something that has to do balances are fixed. customer setup method due to no need to the customer. The customer is subject to the customer. Okay. The sales data customer credit balances. Control account and the more balance credit balance so account balances on the simple the credit surplus account this method will be avoided to the as in the sales data control account the debit balance plus credit balances are shown separately for the purchase of the control account. The purchase of the control account will maintain all the balances for the credit balance. Credit supplies and all the debit balance. Right, credit supplies. The balance, credit balance is and carry down. Contra entries in control account. Contra entries are also implemented the transfers account. It now happen that the business is switched to another business and also by different portion of the business that the two ledger account for the business. One is the sales ledger and another is the purchase ledger. Rather than selling the other, it's to the cover the amount, then agree to set one account amount with the other. Any remaining amount is settled by one business issue. Transfers and setups. Contra entries mean refer to like the transfers and setups and transfer is from one account to the sales to the account of the sales surplus. Chapter 17 Complete Records. In this chapter we discuss complete records advantages of the cost rate as form of cash discount, markup margin, rate of complete records. Sometimes business is small business with budget of not calculation, multiple costs, set of functions, can be advantages of maintaining the record. Maintaining a full set of development record is important point. Full details are allowed among the balance. The preparation of financial statements. The calculation of the profit or loss for the year is maintained through planning. More informed decision making is possible. Greater degree of control over the possibility of fraud is reduced. Comparisons in the register of agency and business are more. Detailed records are available for reference purposes. Information required by bank or other statement of assets. The only records available are not for these assets are liabilities are listed in the statement of assets. The list of assets and liabilities as the statement of assets rather than the statement of liabilities. Formula: the assets, liabilities, and capital are known. I know that only capital increases when a profit is reduced by loss. This is formula for capital profits. Closing capital is equal to capital. Part of the total capital is called the additional capital. If additional capital has been introduced, the loss of closing capital cash discount allowed on markup margin dealing with markup and these most these most measure the loss of markup is the loss of margin is the loss of rate of return. It is sometimes necessary to use calculation. Chapter 18, Part 1, Accounts of Clubs and Societies. In this chapter, we discuss NPO, non-profit organizations, basics and non-major of clubs, income and expenditure account, accumulated funds, subscriptions, not-for-profit organizations. This chapter concentrates on the accounts of non-trading organizations such as clubs and societies. The main aim of the organization is to provide facilities and services for the community. Making a profit is not the main objective. Examples of such organizations include clubs, sports clubs, amateur dramatic groups, golf clubs, scores, etc. In some cases, a full set of double entry records is returned, but it is more usual to find that only a record of money received and paid. Main source of income of society is subscription. These are the amounts members pay, usually annually, to use the facilities provided in the club or society. A person is appointed to act as treasurer and be responsible for collecting activity in the society and paying money owed by the society. At the end of the financial year, the treasurer will usually present his financial statements to the members. These financial statements may contain some receipts and debits, or possibly a trading account function of an expense to the income and expenditure account and a statement of financial position. Preparation of a receipts and payments. A receipts and payments account is a departmental symbol in capital. On a receipt is debited on a credit account balance carried out to income from the the account does not usually distinguish between cash and bank balances. The balance may represent actual cash, money in the bank or company. The debit balance is an asset and represents money in the society, whereas the credit balance in the bank represents bank. A receipt and payment account is like a cash flow. It records all money received and paid. It is important to remember that no adjustments are made for accruals and payments. No distinction is made between capital assets and liabilities. No distinction is made between capital expenditure and revenue. The non-monetary items a real account. Receipts and payments account includes all monetary items related to capital. Preparation of income statement in the club or society. Although buying and selling is not limited to the club or society, many do not carry many do carry out a trading activity. Many clubs operate a shop or a business or small business. At the end of the financial year, income statement revenue should be declared for each to show the profit out of that activity. The trading section of the income statement of the club or society is prepared in the income as well as members. Any expenses which arise as a result of the trading KPI systems of KPI system depositing of equipment should be added to the cost of the goods sold in order to calculate surplus of goods. An income and expenditure account is prepared annually by non-trading organization. Compare the gains and expenses to calculate the surplus of goods. Surplus arises from the gains of the non-trading organization received expenses. The deficit arises from the expenses of the non-trading organization received. Preparation of an income and expenditure account. An income and expenditure account compares the gains of the income and expenses. If the gains are more than the expenses, the difference is reflected on the basis of the expenditure. This is known as the problem for the area. If the gains are less than the expenses, the difference is reflected on the basis of expenditure only. This is known as the loss from the area. An income and expenditure account is prepared with receipt, principal, and principal It is important to remember that taxes for actual capital receipts and capital expenditure also are not included. Only revenue receipts and revenue expenditure are included. Non-monetary items such as depreciation, assets and liabilities, and earnings on the financial year are not included. Where the club or society holds a fundraising activity, the income and expenses of its subscriptions, journal accumulated fund. Accumulated fund consists of the surplus interest and expenses which are accumulated over the life of an organization. It replaces capital in the statement of financial position of the club or society. Preparation of a statement of financial position of the club or society. The principles applied in preparing a statement of financial position of the club or society are similar to those applied in preparing a statement of financial position of the business. The statement of financial position of the club or society shows non-current assets, liabilities, which are not like assets, trading organization. The main difference is that there is no capital investment in the financial position of the club or society, whereas a business usually finds the investment of capital. Members of a club or society do not invest money in the same way the corporate organizations. because of this, the members are not able to communicate well with the club process. This means that this equals to the known as the accumulated form. The club makes deficit and accumulated contributors. This accumulated contributors is calculated as club contribution. Subscription. Subscription owned by members are given the assets and the current account asset investment in the financial. Subscription prepared by members are paid balance and subscription owned as paid balance and the current liability of financial. Subscriptions in receipts and the owned and the receipts and payments account shows the amount of subscription received in the financial. This means that the amount received is registered for the subscriptions both by the members and the subscriptions within the organization. The calculation of the amount relating to the financial should be found as subscription. This may be regarded as the account of subscriptions owing to members will appear as are a current asset to the club process. Subscriptions paid to the fund will appear as a credit balance as the current liability because the club process is an obligation to the commercial, which has already is possible to have balances, to have two balances on the subscription account and the account is all for all the members and some may have paid and subscriptions in advance and some may have not paid. At the end of the financial year, the account is closed by transfer to the account. Subscriptions economic. The club may have a policy that subscription is paid after receiving the account. The entries are made simpler because the business rate of the subscription account is rated with the amount of for the subscription. These irregular payments will be included in calculation of sales and business. As the accounts of clubs are certain, the often incomplete, it is often necessary to calculate credit also. Sometimes rates are also before the preparation of the first statement, the same rates must be done and calculating these investment for this complete set of accounting process are followed. Calculation of business statement. It is sometimes necessary to calculate the business statement of the club also. This can be calculated after this capital. Club or society assets able to do it. Chapter 19, Part 1, Partnership Fundamentals. This chapter will discuss partnership advantages and disadvantages of partnership and content of partnership, partners capital account and capital account versus current account. Partnership. The earlier chapters another partnership. The partnership is a professional people such as accountants and solicitors often operate as partnerships. A large number of families sometimes sometimes a partnership is formed. Sometimes a partnership is formed to the partnership business will remain maintain double entry records in the initial career. At the end of the financial year, however, partnership will aggregate will prepare an extra account after the end of the profit and loss information. Advantages and disadvantages. The advantages and disadvantages of partnership. For agreeing to enter into partnership, as a person responsible is elected. The advantages and disadvantages. Advantages. Additional finance is available, additional knowledge, experience, wisdom, insights are shared. Discussions can take place before decisions. Disadvantages. Profits have to be shared among the partners. Decisions have to be decisions are taken longer to put into effect. One partner's actions are belong to the other. All partners are responsible for the partnership agreement. The partnership agreement is a document between the partnership. Contents of partnership agreement. Although it is not necessary to draw up the partnership agreement from the partnership agreement, drawing up an agreement can not be necessary. clauses of a partnership agreement cover contents of partnership agreement. Amount of capital invested by each partner. Partners do not need to invest it. How partners and losses are shared. Profits and losses are shared. The interest on partners companies and if so, this interest is a reward for the investors. So all the partners the partners interest the most interest can be found contents of partners. Partners salaries are paid and so on the board. If all partners share the work and responsibility, salary can be form of compensation. If an upper limit is based on partners, so on. The business will benefit from partners. If interest on partners is to charge and so on. This is method of discourage partners. Interest on partners. Interest on draw long-term interest on partners. So on. Compensate for loss of interest. Otherwise, loans from partners. Partnership will borrow money from one of the partners. Unlike investing additional capital, interest on the preparation of profit and profit and loss account. Preparation of profit and loss calculation. The profit and loss calculation after the financials of the profit for various calculations and this must be the calculation detailed in the book. Capital account partners correct. Partners correct. Refinance and current account. If partners runs a model for contribution of the current account as the partner owns the partners run a budget or not. Total share of the current account current accounts are not active versus only person any to partner capital current. I think only by after the account statement of financial preparation of the statement of financial further discussion capital account and current account not necessarily all. It is adequate to show the growth in capital. Chapter 20 part 1 manufacturing accounts. Manufacturing. Discussing about manufacturing business. Manufacturing some of So for cost management, for both the direct, the first thing management needs to talk strong ये फर्नीचर में आप next is cost management. This cost is sometimes staff so cost manufacturer may have higher rates. Factory expenses. These are expenses like cost of direct cost of cost of direct total of these of the total cost of production is from that. This is a plot for the demand have some some cost to get them to the and use that but is therefore necessary that one on the piece on the these goods are love in manufacturing concrete necessary to adjust the cost of production actually completed this locally retired definition of the manufacturer makes only one type of having product cost trading section. Comparing of a trading section of cost of manufacturing system very similar to the or any business cost business activities sometimes however the production does not this particular it's not an option loss. Great question of option loss. Profit for their is very similar. So only administration expenses. Here, the profit and loss section. Allocation of Chapter 21, Part 1. This chapter we discuss the company, private and public company, listed plan, statement of business, financial statements. The limited company. Limited company is a legal entity which has subsidiary. It is liability for the whole company. Sometimes it, sometimes a limited company is found as a legal company. Shows that the nature of the limited company, one person acting alone cannot. The capital of the company shows that up to the amount that since a large of the company has placed every borrower such as dollar or dollar or dollar. Profits are distributed in this public limited versus two types of private limited company. A company a public limited company often offer its shares to a public and a private limited company. Limited liability. The refund of the liability for the purchase of the loss will ensure the company. So legal actions are taken against the company. To take an active party. Board of directors. The shares are eligible. Loans cannot handle the share that. More of share more of that shares. Company more total amount of company investment position as only form as with a period term payment conduct of which company shares are set up for shares just payment dividend or in the act that form preparation types of how and how the shares the preparations are any activity that shares are for operation Hey, remember, I'm a trainer, not a tutor. I train you to pass, to succeed, to clear your exams, to get better marks, to excel in your studies, so that you understand and do better, better, and better, and best, the best. It's 2K, I've been taking on-one classes. I'm aware of difficulties faced by various students, below average, above average. I analyze and understand what they don't really understand and how the students suffer. I feel their pulse and try to understand their difficulties, making the student understand the subject and making interesting for them to learn so that they excel in their studies is my core perspective. These days, a lot of students have various difficulties. They won't understand anything in the class. A lot of students who are pursuing online classes. A lot of students who are taken up distance learning classes face various difficulties in understanding the core concepts. So
They try to understand, but most of the teachers have different methodologies to explain, and few students are unable to understand. It's a hard time for the students. Myself, not being just learned, but having understood the subject as a common sense, I'm a professional tutor, professional trainer, and educator, having on-job experience and theoretical knowledge in various subjects, such as direct taxes, indirect taxes, accounting, be it financial accounting, advanced financial accounting, cost accounting, advanced cost accounting, managerial accounting, advanced managerial accounting, management accounting, advanced management accounting, financial management, operations research, quantitative techniques, business mathematics, business statistics, business economics, business studies, and various other business management subjects. I even have on-hand experience in ERP, SAP, Tally, QuickBooks, and all. So I'm in a better position to explain the real logistical issues, the logistical problems, both in a better way. So a lot of students approach me near the exams for exam-oriented crash courses and exam-oriented coaching so that they pass their exams. I have a record 100% of my students clear my exams, clear their exams with ease. 100% they succeed. So I explain them as if they are novice, ignorant novice. Even the ignorant novice understands the subject easily. So I teach them as a common sense, because any subject is more a common sense than a subject. So a student should be capable of understanding the concepts so as to make their life easier. So learning becomes pleasure and enjoy. So anyone who is interested, who wants to clear their exams with ease, without any difficulties, may please get in touch with me. I am available anytime for them. 24/7, I am available for them. Thank you. Sharing is caring. So please subscribe, share to my channel, because spreading knowledge only increases your knowledge.
students, welcome to Shasha's virtual classroom. So this is the first session for IGCSE. So the lesson is Introduction to Accounting. So this is a text from Catherine Kubo. And we have another text. This is from this one, Anandu. Okay. So what is there in accounting in as per Catherine Kubo? The same thing. So understand and explain difference between bookkeeping, accounting, purpose of measuring the business profit and loss, explain the role of accounting to provide information for monitoring progress. So explain the meaning of assets, liabilities, and equity. Explain and apply the accounting equation. Understand the statement of financial position. Record assets and liabilities. So this is as per Catherine book. So whether it is this book or Frankfurt's business rule, it is the same thing. So here the lesson name of the lesson is accounting equation and the graph. So ultimately the name of the lesson may be different, but what is the content? So what is the content is the same. So there are several books written by several authors, and again some institutes come up with their own rules and their own syllabus and all that. But everyone will be within the ambit of syllabus that has been set by IGCSE. So after you have studied this chapter, you should be able to, what are the objectives? Explain what accounting is about. So what is it? Describe the history of accounting. So explain the relationship between bookkeeping and accounting. Okay. Bookkeeping and accounting. List the main users of accounting information and what accounting information. Present and explain the accounting equation. Accounting. Explain the relationship between accounting equation and the layout of the balance sheet. So balance sheet is nothing but statement of financial position. So it is also called statement of financial position. Explain the meaning of the term assets, capital, liabilities, debtors, and creditors. So this is given in more detail. So describe how accounting transactions affect the items of the accounting equation. So so then draw balance sheets of the accounting transactions after. So all these things we are going to learn in this in today's class. So it might be a lengthy class. So but we'll discuss the important things, and we will divide it into two parts. So we will divide it into two parts so that it becomes easier for you also to understand, ask, and review. So divide it. So we'll start with all these ones. So what is bookkeeping? See, a business needs to maintain details about the transactions being taken. So what are the transactions that take place in the business? Business may sell goods, may buy goods, may make the payments, may make payments for different amounts, like they may pay salaries, stationery. Similarly, it may receive even commission. So many aspects. So what is the bookkeeper is the first person. Bookkeeper is the first person who records the transaction from the source. Okay, so he records the transaction detailed record. Detailed record of accounting information, detailed record of business transaction, detailed record of business transaction is it's called so the bookkeeper does everything. He records everything in detail, like he may record the bill number, the amount, the account on which it has been received, so many things. The first source, okay, the first source, first source is made by bookkeeping. So that is known as bookkeeping. Okay. So then what happens in accounting? So whatever information is derived from this is converted into financial statements. So what are financial statements? Financial statements are nothing but income statement wherein you find out what is the income you have received, income statement, ultimate income statement, so position statement, so statement of financial position. It's also known as balance sheet, statement of financial position, and cash flow statement. So those are known as financial statements. So based on the data provided by bookkeeping, accounting is. So what is the need? So any business cannot survive without profits, right? So after you do the business, you have to find out where are we standing, where what is the status. So we have to evaluate everything. So that is why income statements are made. Income statements we can find out what is the profit, what are the expenses, what is the revenue, what are the expenses we gain, and what are the expenses we have incurred, and the net amount, what is the net result. So that is what is. So what is statement of financial position? We make a list of what we have and what is owing to the business, what do we owe. So many things are there. So that you will understand once we come to equation and related concepts. So as of now, statement of financial position means assets and liabilities. So we'll come to know what is this. So what is the need? So we need to understand. We need to understand so that that is the main criteria for survival. So a lot of notes are available. So in the textbooks, you can refer the textbooks for a detailed discussion of this. So it's easy, so you can understand and you can write. So then we will proceed to the main uh, concept, the main theme of this lesson, which is how equation and related concepts and positions. Okay. So you have to remember five components. So basically, so what is accounting equation? Accounting equations is assets equal to liabilities plus minus. So owner's equity is also known as capital. So this is also known as assets equal to liabilities. So now we need to understand what are assets, what are liabilities, what is owner's equity. So all these things. This is the first thing. So you may refer first lesson in AS level cash transactions, wherein I have explained the first step in accounting equation. So chapter one. So you please refer chapter one, part one, and you can cross refer all the cash transactions, credit transactions, up to lesson number even up to 10. So the same thing you will study even in IGCSE, the same thing you study even in IAS level. So there the explanation is in a different way. So that if you want to understand, you can try to see, you can try to understand from there, or you can understand from there. But ultimately, the concept is up to lesson number 10, 8, 9, lesson number 10. The concepts are almost the same. So you can refer there also. So they are almost Then I have completed the lesson number 10 AS level. So which you learn in IGCSE also. But in AS level, it will be somewhat more complicated, and it has been explained in some other way. So explanation, ultimate explanation and concept section. So if you don't want to confuse yourself, you can skip here. So I will be explaining the concept once again to you. So now, see, suppose a person starts a business. Okay, so let us say a person starts a business. So once a person starts a business, what does he use? He will use his money, cash balance. He will have some money in bank. He may have his own building. He may have his own machinery. He may have his own furniture. He may have his own. So he may have his own computer also. So let's assume he has a cash balance 10,000 dollars. Family balance is another $100. Building is another $30,000. Machinery is another $5,000. Furniture is another $5,000. So computer is another 10,000. So let's assume this is just for assumption for you to understand. Okay. So he is starting. He has started a person whoever he is. He has started a business with all these things. Okay. So the business will be using all these things to run the business. So business obviously needs all these resources. So these are resources. So 10,000, 5,000, 10,000, 500. What is the total amount? Total amount of so 45, 60, 70. So it's just illustrative the amounts. It may be much more, but just for you to understand. Okay. So the business owner, so the business owner has invested all these resources in the business. So now, there is one more concept known as business entity. What is what does the business entity concept say? Business entity concept says these are the assets of the business. These are the assets of the business. So what are the assets? Assets are some resources which are used by the business, which have been provided by the owner to the business to earn the revenue. So that is what is assets. See, it is very important. Very initially, you may find it somewhat difficult, but business you have understand accounting. This is very important. So this is very important for you. Yes. So assets. Assets are what are assets? Assets are resources used by the business to continue running the business. So now, what is the business entity concept? So the business entity concept is that so much of assets are owned by business, but so much of money is owed to the owner. So this is known as owner's equity. So how much is owner's equity? Owner's equity is 70. So this is land. Owner's equity. So owner's equity is the business entity. The business has to pay back the owner. The owner's the business has to pay back $70,000 to the owner. Why? Because the owner has paid, has given all these resources to the business. So understand this is very clear cut concept. So this is the main concept. So if you understand this concept, you can move further. So this is very important. Very important, very easy concept. So you may take some time to understand this, but please understand. So the business has assets as well as liability. Assets is something it has, and liability is something it owes. To whom it owes? It owes to the owner. Why? Because the owner has given the resources to the business. The owner has given resources to the business. That is why the business owes back. Owes back. So, in that sense, should we consider that owner is an outsider? Yes. Yes. Owner is considered. So that is why the concept of capital owner's equity will come. So whatever money the owner, the business owner puts into the business is referred as resources which are used by the business analysis, the money that is the owe money. So the liability, which is a commitment which business has to pay back to the owner for providing the assets to the business. The business owners. So always assets are equal to liabilities. Uh, here, this person, this business, he has taken loan, bank loan, of dollar 100. So there is cash balance, no bank balance of 100. So now the assets are 170,000. So liability is also 170. Why? Because the business has taken resources of, see, bank loan means what you will get? You get bank balance. Bank balance will increase. So the loan is given to bank, so the bank balance. So the business has to pay that, which is a commitment, right? So you have to pay that. No. So how can you cannot take enjoy the money and you cannot say the cash, right? You have to pay that. You have to pay that. Bank loan money. So means owner's equity plus capital plus plus liabilities into owner's equity plus liabilities is equal to. So what are liabilities? Even owner's equity is also liability. Internal liability. Internal liability. Internal liability means has to pay to an insider, a person, the owner. But liability, bank loan is an outsider. You have to pay. So even this also you have to pay. This also you have to pay. So always assets are equal to owner's equity plus liabilities, and this is the this is. So now you have understood what are assets, what is owner's equity, what is liability. So the three concepts are clear. What are the concepts? Assets, owner's equity. Assets, liabilities, yes. So in AS level, most of the times they use the word owner's equity. They never use the word capital. They don't use the word capital. So don't get confused. And ultimately, the concept is important. So this is what it is. So the concept is crystal clear that assets is equal to liabilities plus equity. So this is what accounting and business. So accounting is just understood. And this itself is also positions. So what are the assets available on the market? The assets available are these are the assets. These are the liabilities. So this when we put this in the form of a statement, we put statement of financial position. So so we'll continue. Maybe in the next class we'll work out some questions. So we'll discuss this concept thoroughly. So what is the plan? The plan is that we'll discuss questions from catering to catering to comedy, and even plan book. We'll discuss. So I will share you the questions so that they will be available on the screen. You can see on the screen. Then maybe you can pause the video and then you can answer yourself. Then after some time you can just check whether everything is correct. So ultimately, after doing all the lessons, we work out question papers also. So we'll be solving all the question papers. So possibly how much our question papers are possible, MCQs, so different questions. All those question papers also will be solved so that you are crystally very strong in your to write your book. So please subscribe, share. Please let others also know about this classroom, so virtual classroom. So help each other. So let me go the channel also. Let me decide to know the students. So if you really like it, so if you have any doubts, please let me know in the comment section so that I explain to you more and more different ways so that you can just check out all the other lessons, and if you find any errors or mistakes or something, so that identify it and do next time. So till then, have a good bye. So see you in the next. Dear students, welcome to Shasha's virtual classroom. So this is introductory accounting session. So hopefully you might have gone through the first lesson, introduction to accounting, the theory part. So now to start with, I just want to discuss certain points, certain important things with you. I believe that you are matured enough to understand whatever I discuss in today's session. See, accounting in IGCSE and A level. There is a accounting in IGCSE also and A level as well. Okay. So, what is there in IGCSE and what is there in A level? That is what I am going to discuss. So, how important is IGCSE for A levels? Okay. So, in IGCSE, will be discussing all these lessons. So, we'll be discussing, see, introduction to accounting, where you have accounting equation, all that stuff. So, but this will not appear again in A levels. A levels in the sense AS level. So, but the concepts, whatever you are understanding here, is applicable to the entire accountancy subject. Okay, entire accounting subject. So, concepts are very important. So, try to understand. Okay, Try to understand the concept. Understand. Okay. Don't have a casual approach. Don't have a casual approach towards the subject. Try to understand what you are doing, what you are learning, why you have to do a particular thing, why you should not treat a particular item, why, and all those things. So understand the subject as such. So that is what is concept. Okay. The concept should be clear. What is the concept? Concept is why not. You should answer yourself. If a teacher says that you have to treat a particular item like this, you should be able to answer why you have to treat and why you should not treat it in that particular some other way. So that is what is concept. When you have reasoning skills, okay. So reasoning skills. So you should develop reasoning skills. So this is the specialty of IG, Cambridge International Board. What is the specialty of Cambridge International Board is reasoning skills should be very strong, your concept should be very clear, and you should have understood the subject. That is what it is. So, unlike other boards where you have to study lots and lots of things, but here you will be taught comparatively, you will be taught a lesser volume, but the in-depth will be very strong. Okay, so it's very important. So that is why they will be the students of Cambridge International are very sharp. You have to understand the subject. You have to understand everything. Whatever you learn, you have to understand. Don't do like how kids used to do 1 plus 1, 2, 2 plus 3, 5, something like that. So without understanding what normally some students do, they will just remember things and then they do. They don't understand. They just remember things and then they do. No, never do like that. So you have to understand everything. You have to understand everything and you have to learn the subject. If you start understanding the subject, then the subject will become interesting for you, and if you feel like studying it again and again, you feel like you are a master in the subject, you are understanding everything. So ultimately, your A levels, you will score very high grades in A levels. So if you are very strong, so from the day one, ensure that you understand all the concepts. So we will be learning introduction to accounting, double entry bookkeeping. In this, we will be learning how to prepare ledger accounts, what is a ledger account. So here we will study what is asset, what is liability, various accounting terms, very important accounting terms. All those things we learn here. Then the trial balance. So what is a trial balance? So what is cash book? Cash, how to record cash transactions, like when you receive cash, when you pay cash. Then petty cash book. What do you mean by petty cash book? So various types of business documents like maybe receipt, payment, invoice, voucher. So many documents are there in business. So any business will definitely have a document. Like suppose you go to a shop, they will give you a bill, right? They will give an invoice wherein they will have written everything like what you have purchased and what is the amount payable. So that is what is a document. That is a document of one supermarket. Similarly, you transact, you go and buy anything from any shop, you will get a bill, you will get an invoice. So that is what called document. So when you pay something, you give something, they give something. So that is what, because there is proper evidence of your payment, your receipt, or the transaction you have done with the particular business. Okay. So books of time entry. What are the books of time entry? Like you maintain sales journal, purchase journal, so cash book, so many things and all. So again, coming to the next part, financial statement. So this is income statement. This is part B is position statement. So income statement means to find out what is the profit you have got by doing the business. Financial statement means position statement means what is the position of assets and liabilities. So what are the assets and liabilities that we will discuss in the first lesson. So accounting rules you have to follow in maintaining the books of accounts. You cannot write however you want because accounting rules should be followed universally. So you have to write the books of accounts. You have to understand the books of accounts in a proper way. Anyone who sees the books of accounts should be able to identify what the booker, what the business is trying to tell. So other payables and receivables. So you may have to pay some money to some other person. So you may have to receive some money from the business people. So all those things. Accounting for depreciation and disposal of non-current assets. So what do you mean by non-current assets? What is depreciation? Irrecoverable debts and provision for doubtful debts. Bank reconciliation statement. So journal entries and correction of errors, control accounts, incomplete records, accounts of clubs and societies. This is called not for profit organizations, partnerships, manufacturing accounts, limited companies, analysis and information. So this is all you will learn in IGCSE. So you believe it or not, almost most of this is again repeated in AS level. Okay. So most of it is again coming in AS level. So let us see what is coming in AS level. So this is a book from book by David Hopkins. So double entry bookkeeping, cash transactions, how you record cash receipts, cash payments. Double entry bookkeeping, credit transactions, how you record credit transactions when you purchase on credit, when you sell on credit. Books of prime entry, it was there in here also, right? Books of prime entry, see. Books of prime entry. Okay. So again, balancing accounts, how do you balance all those things? These balancing accounts you will learn in part A. Part A or part B, you will learn here itself. So balancing account you will learn either here also you will learn. So then classification accounts, division of the ledger. So in this you will learn in this double entry bookkeeping part B. So the same thing, but the lesson names are different. The classification of account, the trial balance. The trial balance is also here also. See the trial balance. So where is the trial balance? Trial balance is here also. So okay. So then income statement for sole traders. So financial statements part A, part B, position income statement of financial position part B. So here it is statement of financial position part B. So then accounting rules. So what are these accounting rules? So these are the accounting rules. So the same thing you have here also the accounting rules. So accounting principles or concepts in this itself. Accounting rules also along with this when you are learning the lessons here. So even along with this you will be learning accruals and prepayments. See accruals and prepayments. Accruals and prepayment. This is nothing but the same thing. Other payables and other receivables are nothing but accruals and prepayables. Then provision for depreciation of non-current assets. So provision for depreciation of non-current assets. Where is it? Accounting for depreciation and disposal. Irrecoverable debts and provision for doubtful debts. Irrecoverable and doubtful debts. Bank reconciliation statement. Bank reconciliation statement. See bank reconciliation statement. Control accounts. Journal entries and correction of errors. Journal entries and correction of errors that will come in suspense account here. So again, where is it? The trial balance also. So again, books of prime entry also you get some entries. So then control accounts. Control accounts are here also, right? Control accounts are here also. See, control accounts are here also. So this is A levels, AS level and A level, both. So one subject, one book for both. Okay. So till here, there is this is AS level. From here onwards, it's A levels. So now coming to again, so what happens? Then control accounts, incomplete records. See, where are incomplete records? See incomplete records. Accounts of clubs and societies not for profit. Accounts for clubs and societies. So where is it? Not for profit organizations. So here, see in A level. Okay. See, one part is there in A level also. See, whatever you learn here. Accounts of clubs and society is not there. This is there in A level, A level. So you have to be very strong. Okay. So then partnerships. See, partnerships. Where is it? Till here, sorry, till here. So it is A level, partnerships. Partnership changes onwards, we will have in A level. Okay, from here onwards it's A level. Partnership changes. So till here you have in AS level. So this is AS level. Okay, now partnerships, manufacturing accounts. See manufacturing accounts. So where are manufacturing accounts? See A level. Okay, see one lesson is there in A level. See how important limited companies, accounts of introduction to accounts of limited companies. Introduction to accounts of limited companies. A portion is there in A level also, a portion is there in AS level also. This is split into two, AS and A level as well. Okay, now then manufacturing limited companies, analysis and interpretation. Analysis and interpretation, see here, the last lesson is. Analysis and communication of accounting information. So basically, what I want to tell you is, so please focus on learning more and more points in IGCSE, so that your A levels become easier for you and the scoring becomes easy. So in the course of the classes, we will be doing questions from this book. So we will be solving question papers, previous year question papers, a lot of important questions. And even in AS level and A level also, we'll be solving a lot of concepts, important question papers, and lot of other important stuff. Okay. So basically here, I just want to help you. So we just want to help you in understanding the subject accounting, so that it becomes easier for you to score high. And so I just wanted to tell that IGCSE is equally important. So don't ignore anything. Take it seriously. Understand the concepts itself. So make use of. So what you can do is, you can even start answering some questions from AS level also. So related questions also you can try. So you can be way forward, so that you prepare for A levels right from the initial stages, right from IGCSE level itself. If you are ready for A levels, you should be ready for A levels. So you should be very proactive, so that you get very high marks, very distinctive marks. So that today's world is very competitive. So I have seen lot of students dropping out from accounting subject because they feel accounting as a very tough subject. They are not capable of handling. Most of the students less very grades, and normally they will lose interest and all those things. So, but if you understand the concept, it's very simple. But try to understand the concept. Why? If you understand each and every lesson, it means you are able to understand the concept. That is what it is. Also, what do you mean by concept? What do you mean by concept means? Concept means if you are capable of understanding and solving the questions on your own, then you have understood the concept. So whenever I place a question in front of you, so what you can do is, you can just take a screenshot of that, try to answer on your own, and then you can just check the answer with the solution. So this is how your progress should be. So ultimately you will understand, and if you have any difficulty in understanding, you please let me know as a comment in the section. In the comment section, I will explain to you in several ways. I explain to you in several ways. Don't hesitate. Don't think you will look like an idiot. So please feel free to ask me any doubt, whatever, even if it is very silly doubt, please feel free to ask us. So we are here to help you. We are here to guide you, understand the subject, and prosper in your academics. So next class we will start with first lesson, Introduction to Accounting. So here we will learn a lot of important concepts like what do you mean by assets, what do you mean by liabilities, what is accounting equation. So then what is bookkeeping, what is accounting. So a lot of other concepts we will learn in the first lesson. Then second lesson we will learn how to record a ledger, what is a ledger. So all those things we will learn in second lesson. So here onwards, gradually we will be learning one by one lesson. So after finishing all the lessons, we will start working out even the question papers. We will start working out the question papers as well. So this one, CAE question papers, okay, Cambridge International Examination question papers. So we'll catch up in the next class. Till then, have a good day, good night, bye bye. Chapter 4, Part 1. Contents. Categorization of ledger accounts, sales ledger, purchase ledger, marketing ledger, cash book, column category, contract, bank owner, column category, cash discount, discount allowed and received. Categorization of ledger accounts. Sales ledger. The ledger in which the accounts of paid customers are paid. Purchase ledger. Ledger in which the accounts of paid suppliers are paid. Nominal ledger. Ledger where all the other accounts are paid. Sales ledger. This is also referred to as the reverse ledger or the sales ledger. All the personal accounts of paid customers are paid in the sales ledger. Purchase ledger. Purchase ledger. This is also referred to as the debtors ledger or credit ledger. All the personal accounts of paid suppliers are paid in the purchase ledger. Nominal ledger. This is also referred to as the general ledger and apart from the cash in the bank account and account of paid customers and paid suppliers, all the remaining accounts are kept in the nominal ledger. This ledger will contain an account of assets, liabilities, expenses, income, sales, and purchases and goods. Asset account are also known as sale account. Account for expenses, income, and capital account. Cash book and petty cash book. Cash books. These contain the main cash book wherein all amounts received and paid in cash and checks are recorded on. The petty cash book containing details of small amounts received and paid from various accounts. The two column cash book. The two column cash book explains how to separate accounts cash account and bank account are very important. In practice, it is common for these accounts to be treated as ledger and shown in the separate book shown at the capital. The cash account and the bank account appear side by side in the capital. The rules of double entry and still apply. Any money received is debited to the cash book and the money is paid in the cash will be entered in the cash book column and it is paid in the bank will be entered in the bank account. Any amount paid is payroll is credited to the cash book. If the amount is paid in cash it will be entered in the cash book column and it is paid out of the bank will be entered in the bank list. The cash account and the bank account appear side by side. They still keep their own identity and balance sheet. Since the cash book is part of the balance sheet system, the both ledger account for both cash and bank. It is, however, also a book of trial because it is one of the books in the standard accounting. Contra entries. Contra entries sometimes surplus cash is billed to the bank of from previous cash. Such transactions are known as contra entries because they appear on both sides of the cash. Debited to one account, credited to another. These transactions are recorded after the intelligence of the account. Receive the money and paid in the account. The name of the account will be entered in this column. Each case the letter C will be entered in another column. Indicate that the bank over. As explained earlier, the cash column and the bank column of the cash book of bank is related to closely. The balance of the cash column will always be brought down as the balance in the small of the index will be seen in the cash book. In each case, the balance will be nil. It is not possible to have a credit balance on the cash book. It is, however, possible to have a debit balance. The bank may allow the business to have bank over. This means that the bank allows the business to pay out both from the bank value to be put into the bank. Interest will be charged by the bank on the amount withdrawn. If the bank account is balanced with 8 million and the balance will be drawn down to 3 million. This represents the amount the business owes the bank and its liability. The B column cash book. Many businesses maintain a 2 column cash book rather than a 2 column cash book. In case of that, the B column cash book has an extra money column inside to record cash discount. The 3 column cash book. In 3 column cash book, many businesses maintain a 3 column cash book rather than 2 column cash book. They consider cash discount is given. Cash discount is an allowance given to the customer when an account is settled in a limited time may be settled as an account does not have to pay any cash particular to cash discount. The bank for amount will be the decided rather than how the account is settled. Cash discount is a means of encouraging customers to pay their account promptly. The supplier will receive. However, the money is paid earlier and so it is available for users. Cash discount. 3 column cash book has an extra money column inside to record cash discount. Cash discount is allowance given to customer when the money is settled in the cash to settle as a an account does not have to pay any cash to particular to cash discount. The immediately that is settled the money on the account is paid. Cash discount is a means of encouraging customers to pay their account promptly. The supplier will still receive an amount slightly earlier than the amount. However, the money is paid earlier and so it is available for use in the business. Cash discount allowed under discount allowed in the discount syllabus is an expense of the whose cost of candidates. Discount received is the discount of credits and this when it pays to your account. It is important to realize that discount received does not become considered surprise this is received either without plan this may occur because the data does not have or it because of an error on the server. The check is the sum of the business will also become Chapter 14, Part 1 Bank Reconciliation Statement. Chapter 14 Bank Reconciliation Learning Objectives. In this chapter, we learn to understand the union purpose of bank statement, update the cash book for bank service, bank interest, dividends, correction of industry, transfer debits, dividends, and stamp orders. Understand the purpose of and prepare the bank reconciliation statement to remove bank errors and prevent deposits and active rejections. We discussed the bank statement, comparing calculated bank statement, operating state classes, and stages of bank reconciliation. Before bank the bank statement. The bank is a statement or a account status including the transaction account with a statement the bank statement is a copy of customer statement. This is the record of transaction. It means there is a customer. Receipt of both the bank and it means statement of the customer's account. The receipt of both the bank positive bank balance and the great balance and comparing the difference. These are the bank statement comparing the bank statement not the product of the product of comparing the bank with the product of the bank is the bank with the balance of increase the bank balance on which they are recorded as causes of decrease. Explain the bank's bank account of the bank statement. Timing difference. These are equally which is not a but not a joint tax. Because the way I compute the account amount not a free. Either check and cash not a free. Others not a copy. Don't have
Selamat berpuasa dan salam Ramadan. I have so much respect for everyone who is fasting this Ramadan because it's really not easy needing to wake up so early for sahur, then fasting the entire day with no food, no water, but still trying to stay productive and having a good daily routine. Mungkin ramai yang tak tahu saya sebenarnya membesar di Malaysia, sebuah negara Islam. Oleh itu, saya sudah terbiasa dengan budaya dan tradisi orang Melayu. Saya pun kadang-kadang turut berpuasa dengan kawan-kawan untuk berhungry dan berthirsty dengan mereka. So in this video, we'll go through the ultimate study guide for Ramadan, or how to study when you're feeling tired, how to structure your study sessions around fasting, how to stay productive even when you're exhausted, and how to avoid procrastination when all you want to do is nap, including what to do when your family is noisy and won't leave you alone, even though you need to get work done. Let's go. First, deciding when to study. When I asked you on Instagram, most of you said that you like to study either in the morning or at night, but the best approach is to actually do both. But there is a strategy to this. Whether you're a morning person or a night owl will determine the kind of work you should be focusing on during those times. A really easy way, bestie, to figure out when you work best is just by identifying your chronotype. There are actually 4 sleep chronotypes, so there's the bear, lion, wolf, and dolphin, and each one of them has a different peak energy period. Your chronotype will determine your best productivity times when your mood is naturally elevated and the best times for eating, sleeping, and studying. I'll leave the link to the quiz that I took personally in the description box below. So that's the first thing that I want you to do, bestie, after you finish watching this video, because once you've identified your chronotype, it's time to structure your perfect study session for maximum efficiency. So, how to choose the right tasks for your study sessions based on your energy levels. Your peak productivity periods, which will be different depending on your chronotype, should be spent on high focus tasks, while your low energy periods should be spent on less demanding work. Examples of high difficulty tasks are doing past year papers, anything to do with complex problem solving, essay writing, exam revision, deep learning, and memorization. So that means if your peak productivity periods are in the morning, you should be doing these tasks after subuh. But if you're a night person, you would be doing these tasks after Isha. So this includes subjects like mathematics or sciences, or any subject that requires deep concentration and a lot of brain juice. And if you have a weak subject that you really want to improve on, this is the best time to work on that. I used to struggle a lot with mathematics. I don't know, me and numbers just don't get along. So what I would do is I would wake up at 4 a.m. every single morning before school starts to do 2 past year papers. And I actually went from scoring C's to distinction in A levels. Now, what kind of tasks do you do during your low energy periods? So for my night owls, that's after subuh, and for my early birds, this is after Isha. This is the time for you to write notes, review them, do homework, flashcard revision, and light reading. Tasks that don't require as much brain power to do. I really like using my low energy periods to recap information that I memorized in my high energy periods. But if you want my honest advice, bestie, you should be using this time during Ramadan to adjust your body clock and become more of a morning person. Why? Because classes and exams are held in the morning, so training yourself to be more alert during those times will really help you perform better and improve your grades. So if you ever wanted to fix your sleep schedule, then this is the perfect time to do it. And if you want more tips on how to become a morning person, you can check out my video here. But like this video and subscribe if you're enjoying it so far. But if you're feeling exhausted, especially during Ramadan, which is completely understandable, the best way to be productive with minimal effort is by turning your phone from a distraction into a tool. I've spoken about this before, but you don't even need to get out of bed. You just switch to a more productive app. You can learn languages or play chess, but personally, I have no interest in those, so I use this app called Brilliant instead. I've been recommending this app for the past 3 years, but basically, it just turns any complicated STEM subject like engineering, programming, AI, computer science, and they turn it into game-like, fun, bite-sized lessons. It seriously looks like a game, but you're actually learning something. I am pretty sure that Brilliant just updated their math courses, so now the additional content will focus more on problem solving and logical reasoning, so if that's what you're interested in. My favorite are, of course, the science courses, and so you learn how to think like an engineer and develop your scientific intuition. But honestly, it's just a really good way to determine if that's what you want to pursue in university. You can actually try Brilliant for free for 30 days by scanning this QR code that I'll put on the screen, or you can visit brilliant.org/fayfilms. I'll leave this link in the description box below because you can also get 20% off the annual premium subscription by using the same link. Next, how to maximize your productivity. When we're tired, we won't be able to finish everything on our to-do list, and that's okay. And so what should you prioritize when your energy is low? We're going to use something called the eat the frog technique. I don't know why they chose frog, but let's just go with it. Basically, bestie, you'll start your study session by tackling the hardest, most challenging task first. For example, if you have a project deadline, an upcoming exam, or a long essay to write, that will be your frog. Again, why frog? People will tell you to do this because it builds momentum and it gets the hardest thing out of the way, but I'm going to tell you that the more important thing is that doing this gives you flexibility. If you're a morning person and you don't finish your task, you still have the rest of the day to complete it. If you're a night person, you can get the bulk of the work done before midnight and you can finish it up in the morning when you have less energy. And I say this out of experience because in Malaysia, Ramadan almost always coincides with exam season, which is really unfortunate. So me and my friends, remember how I used to fast with them to just give them support? We found out that getting the hardest work done first make a huge difference. When you're tired, you can fall into the trap or the habit of pushing things like revision or memorization back day after day after day because you're too tired to do them. Let me know if you also struggle with this in the comments, bestie. So instead of working on them when you feel like it, just tell yourself to start with those difficult tasks first, and then you can move on to the rest. An advertisement might play in the next few seconds, so if you would like to support this channel, please do not skip the ad. Thank you. But how do you shorten your study sessions? Here's the trick to actually getting work done efficiently to shorten your study sessions. Whatever the amount of time you think you need to complete a task, cut it in half. So if you think you need 2 hours to finish your notes, give yourself 1 hour instead. Instead of dragging out an 8-hour study session, you get the same amount of work done in just 4 hours. And what do you do with that extra time? You can either use it to rest and recharge or shift it to morning or night to refine the work that you just did. Remember what I said in my How to Be a Perfect Student video? You might tell me, if I spend half the amount of time making notes, it's gonna look like a chicken made it. Or if I spend a half the amount of time revising, I probably get all the questions on a past year paper wrong. And that is completely true. However, if you don't get stuff done, you don't know how to improve. If you want a deep dive into a lot of non-basic study tips that will transform you into a top student, then you can check out my video here. Next, what if my family is noisy? Can you tell that I'm Southeast Asian? Because Southeast Asians know the struggle when it comes to having a noisy family. During Ramadan, I know a lot of you will struggle with getting work done because your family is all awake and your siblings, are bothering you in one ear and your parents are nagging you in the other ear. So here are a few small changes that can make a world of a difference that you can try. You can try putting on headphones and listening to white noise or brown noise. YouTube has many options, and I find that this is less distracting than actual music. Or you can listen to lo-fi. So I already have 2 study with me sessions posted online. I will film more, I hear you. I'll leave them in the description box below. You can put that on and feel like you're studying with me in the library instead of a distracting environment. But if your family is noisy no matter what my friend did was that she tried to get as much work done in school or outside before she got home. So during lunchtime, because she can't eat, she'll sit with us and do her work instead, or in between classes when waiting for teacher, and sometimes she'll even stay in the library before going home. If all else fails, bestie, just embrace it. Embrace the chaos and be able to work in a noisy environment. You will build an insane ability to focus anywhere, which is a superpower, by the way. This will really help you during exams, in workplaces, or just life in general. If you've made it this far into the video, comment down below what you're grateful for this Ramadan to get triple the blessings in return. Thank you to my dear friend Sophia Amira, my old tuition teacher Cikgu Sabaria, and all my Muslim besties who wholeheartedly gave me their advice and contributed to this video. Remember to like this video, subscribe, and turn on the notification bell and set it to all so that you don't miss out on any future uploads. Thank you for 1,370,000 subscribers, and I'll see you all in my next video. Bye, bestie!
Dear students, welcome back to Shasha's virtual classroom. This is a small rectification video. Okay, so rectification video in the sense, it's a very small rectification, minor rectification. So in the previous class, that is chapter 1 P4A, we had done this problem. So in this, 12,500 minus 1,800 is 10,700. So 10,700. So whereas in the answer in the previous class, it was mentioned as 11,700. So it was a small mistake, but it was not brought to my notice. So I felt very sorry for my dear students because they didn't let me know about the mistake. I would have rectified it long back. So now, just after going through my own videos, own classes, once again I just found out this small mistake. So please, students, please let me know if there is any because even I am a human being. So it's a very small mistake. So instead of I have taken instead of 10,700, I have taken 11,700. So please let me know. Okay. So that's all. So we'll continue with chapter 1 P4B going further. So dear friends, today's class we will discuss some questions based on lesson number 1, the first chapter. So based on those concepts, accounting equation lesson concepts. So here we will discuss. So before that, just have a. So this is Frankfurt's book. If you haven't answered already answering them, if you haven't already started answering them, you now have a set of graded review questions to try. Graded means that they get more difficult as you go through them. Ideally, they should be done in the sequence as they appear. However, don't forget that the questions with an A after the question number do not have any answers provided in this book. Your teacher or lecturer will be able to provide you with the answers to these questions, but be sure to attempt them first before asking for the answers. The answers for other questions can be found at the back of the book. We realize that you would like to have all the answers in the book. However, teachers and lecturers will not then be able to test your knowledge with questions from this book. As you would already possess the answers, it is impossible to please everyone, and the compromise reached is that of putting a large number of review questions in the book. Okay, so this is very important. So a wise decision by Frankfurt. So I 100% agree to this. So this is what is my approach. So whenever you see any questions, you have to first try answering them. So if you are unable to answer them, then you have to just go through the lesson once again, try to understand, then again try to answer it. Okay, so these are the questions from Triangle. So we'll just start discussing. This means that appropriate reinforcement of what you have learned can take place even if you are studying on your own and have to miss out the year questions because you have no access to the answers. Multiple choice questions. But in this lesson, in this class, in virtual classroom, we'll discuss all the questions. Okay. So whether they are A questions or whatever. So before that, we just try to answer yourself. So multiple choice questions. So now here you can see what is the complete the gaps in the following table: assets, liabilities, capital. So what is the equation? Assets is equal to liabilities plus capital. So that is the equation, right? Assets is equal to liabilities plus debt. So if this is 12,500 and this is 1,800, what this will be? This minus this, that's all. So 12,500 minus 800. 11,700. So the first answer is 11,700. So 28,000 minus 4,900 is again 28 minus 5 is 23. 23,100. So 16,800 minus 12,500. 4,300. So this one will be 25,500. You have to add this and this, so that will give you this number. So okay, here also 19,600 minus 16,400. 19,600 minus 16,450. 3,150. So this is, so what this will be, this plus this. 11,650 plus 39,750. 51,400. Okay, so that's also simple it is. So I think this one you can try. So we'll discuss these questions in the next class. Okay, so we'll discuss in the next class. Then very next class we will discuss this. So now you can try answering this on your own. So maybe you take a screenshot of this and you can start working out and you can keep it ready and you can see IGCSE C1 P 5. Okay, 5 or 6. Okay, C1 P5 or 6. So they're all related. So I am giving the one number for each and every lesson. So in a sequence so that you can easily follow them and you can understand in a better sense. So you have to go it in a logical order. So see, that is what even the author has recommended. So see what the author has recommended. If you haven't already, see here you can see. They should be done in the sequence they appear. Okay, they should be done in the sequence there. This is very important. So we will also go lesson wise, we'll go everything topic wise, concept wise, we'll go one by one so that the concept understanding is clear to you. Which are the following items in the following list are liabilities and which of them are assets? Loan to C surely. Loan to C surely means you have given loan. You have given, so it is an asset, right? Because you have to receive back. So you have given to someone, so it is an asset. You have to receive that money back. It is not loan from, it is loan to. It is an asset. So B, bank overdraft. Bank overdraft means you have taken temporary loan from bank. You have to pay it, liability. So fixtures and fittings, asset, something you have. So to use in business, asset. Computers also asset, you have something to use in business. We owe a supplier for goods. So we owe, no, it's liability. Simply it's liability. Whereas we own, we are owning it. So asset. Okay. So this one again you can do it as homework. This is homework. This is homework. So answers for this we will discuss in the next lesson or class. Lesson or next class. Okay. Next class. It is the same lesson, so it is not next lesson. It is next class. We'll discuss this. So that is C1 P5 IGCSE. C1 P5. Okay. So state which of the following are wrongly classified. So which are wrongly classified assets? Loan from C Satish. Loan from, you have taken loan. So it's a liability. It is wrongly classified. So it should not come here. It should come here. So cash in hand, it's correct. Machinery is correct. Creditor is wrong. So it is wrongly classified. It is not an asset, it is liability. Premises is an asset. Motor vehicle is an asset. So again, stock of goods. Stock of goods is an asset. You have something you have. Debtors. Debtors is also something you owe. You own. Okay, something someone owes you. What is asset? Asset is something you own and something that is owed to you. So debtors are paid customers and they owe you money. Money owing to bank. So this is correct. Okay. So this is how. Just check the concept of whether you understood the concept of assets and liabilities. It's very important, very basic, but very important. So again, this one is homework. C1. Okay, so we'll see what is required here. So why is it setting up a new business? Okay, before actually selling anything, you bought a van for 4,500, a market stall for 2,000, and a stock of goods for 1,500. So van, market stall, stock. So put together. So 45, 2,000, 1,000. Okay. He did not pay in full for his stock of goods and still owes 1,000. 1,000. He borrowed 5,000 from C Fox. These are the liabilities which he has to pay. So these are the assets which he has owned. Okay. Not pay. He borrowed after the events just described and before starting goods. He has before trading starts, he has 400 cash in hand and 1,100 cash at bank. So these are all assets. So 4,500 is van, 2,000 is market stall, stock of goods is 1,500. So he did not pay 1,000, it's a liability. He borrowed 5,000 liability. So after the event just discussed, before starting he has 400 cash, 400 cash in hand and 1100 in cash in hand. So these are all the assets. So just add them. 4500 plus 2000 plus 1300 plus 1300 9500. So this is 6000. So what is capital? 3500. Simple.